Hi, good afternoon, good evening, wherever you are in the world. Robin Thornton here from Holborn Assets. If you're joining us for the first time, a very good welcome. If you're a returning viewer, nice to see you again. I'm really excited today. We are joined in Portugal by André Moreira. Now, I might have got his surname pronunciation a little bit wrong there, so apologies. But welcome to this short webinar. We're going to explore life after NHR. For those of you who perhaps know a little bit about Portugal, that came to an end in December 23, and the new NHR, we've called it 2.0, it's the ITS, has taken over. And we're really, really excited to welcome Andre, who is probably the most educated gentleman I've ever met. Triple master's degrees in tax and immigration specialist as well. So, Andre, welcome.
Hello, Robin. Thank you very much for the warm presentation, the warm welcoming. That was too much, but thank you so much for that. So yes, as you mentioned, we will be delving into the NHR, a comparison between the first one and the second one, what's currently in place, what's going to finish, what the differences are going to be. So I will start by saying that this is going to be the summary of the presentation. I will start by saying that the name itself, NHR, non-habitual resident, was copied from the English regime, the non-domiciled. And so it is a bit uncertain. It is a bit weird for most people, especially I have clients asking me, but how can I become a non-habitual resident if I am an habitual resident?
Yeah.
So the non-habitual resident regime 1.0, like the 2.0, is for individuals who become full resident for tax purposes in Portugal. So it's a set of tax benefits. So I will now delve into the specifics of NHR 1.0. So basically, the NHR 1.0 was available for any individual person over 18 years old who has not lived in Portugal for the past full 5 years and registers as a resident for tax purposes. So these are the three these are the three prerequisites to actually get the NHR 1.0. Now, NHR 2.0, or incentivized tax scheme, as it is called, as well as it is known for, is similar, but it has two additional prerequisites. One of them is that you must be performing a high added value activity in Portugal, and you must be under an employment contract or self-employment agreement in Portugal as well. So it only works if you are doing this and if you are under a high added value activity. So there's a very short list of activities. You must be in this list to benefit from NHR 2.0 or ITS. So basically, I've made a comparison, a table, which gives you the prerequisites between the old and the new regime. So basically, the only difference is, as you may have mentioned, that the applicant has to perform a high added value activity under employment or self-employment in Portugal. By the way, I've also added to this table requisites for keeping the regime and requisites in one case and the other. So in the first case, NHR 1.0, there were really no requisites to keep the regime. All you had to do was to continue being a resident for tax purposes in Portugal. If you cease to be a resident for tax purposes in Portugal, then the regime stays on hold and you may resume it afterwards once you return to Portugal. Now, NHR 2.0 is slightly different, as mentioned. So for you to keep the regime, you have to keep your employment or self-employment in a high added value activity and have no gaps bigger than 6 months in between jobs. So this is a big difference from the old regime to the new one.
Interesting, yeah.
So a typical question of clients, both the NHR 1.0 or 2.0 lasts for 10 years counted from the year of granting. So I gave you here an example. If an individual becomes resident in February 23 and has had his NHR granted, he will get it until 2030, until 2032. There you go. From 2023 until 2032. So this is also tricky because sometimes clients ask, but I've just now moved to Portugal in December. Does it start from December onwards? No, it starts from the beginning of the year in which you become resident for tax purposes.
Interesting, okay.
Now, the benefits and conditions specifically of the NHR 1.0. What you had is basically you had an exemption on royalties, dividends, and interest, and these were all exempt because in most double taxation agreements, they were taxable in the source country. Employment income from abroad was also exempt as long as it has been effectively taxed abroad. Now, this is a big difference in terms of employment income and all other types of income. I will go through the other types. Self-employment, capital gains from immovable property, they were exempt if taxable in the source country, they usually are. And movable property, this is the caveat of NHR 1.0, is that you don't get any benefits on capital gains from movable property. So you will always pay the 28% regardless. You've got the pensions tax at 10% or exempt if the applicant became resident before March 2020. Now, what is different from the employment income in regards to all other types of income when being compared is that all other types of income only imply that the income has to be taxable as per the double taxation agreement. It doesn't say that they have to be effectively taxed. Now, when it comes to employment income, it has to be effectively taxed in the source country for one to get an exemption in Portugal. Otherwise, a 20% flat rate applies if the job is performed under a high added value activity or sourced inside Portugal, which is basically the same. If you perform the work inside Portugal or you're performing it outside Portugal and it hasn't been taxed, a 20% flat fee will always apply. Now, NHR 2.0, benefits and conditions, as you can see, it's a much, because basically you are exempt from all types of foreign income as long as you keep an active employment or self-employment, as already previously mentioned. So this really is the only condition for keeping the NHR 2.0 when compared to NHR 1.0. Now, before jumping into the common misconceptions, I want to tell you that the three big differences between NHR 1.0 and 2.0, as you can see, are one, pensions. Pensions were previously taxed at 10% under NHR 1.0, and now they are not subject to, so they're not subject to any special benefit. You pay full tax on pensions. The idea was to avoid attracting people wanting to move to Portugal who would not add value to the country. Yeah. So this is why the legislature has changed so much between NHR 2.0. This was also seen, by the way, as an scapegoat for the housing issue. It was seen as putting a lot of pressure on the housing issue, on the housing market. And so this was also the reason why pensions were removed. So pensions are no longer in NHR 2.0, but were in NHR 1.0. Movable property, as mentioned, it is taxable at 28% under NHR 1.0, but it is exempt under NHR 2.0. And of course, the third difference, as I've mentioned, is that you need to keep an active employment or self-employment. So these are basically the three big differences between NHR 1.0 and NHR 2.0.
Can I just ask you a question there, Andre? That's a really interesting point. So, the benefit really, or the focus has moved to employment generating economic activity, and it's gone away from attracting high net worth, shall we say, pensioners from maybe Northern European countries. So I get that makes a lot of sense. Does that mean that theoretically, if you get 2.0 ITS and you are employed, does it have a time limit when it would expire, like the 10-year rule, or could it potentially, go on forever?
It's exactly the same. So NHR 2.0, as I've mentioned, is valid for 10 years.
So you won't get it as well. Okay. Yeah.
Correct.
Got you.
As I mentioned, there are only three differences between 1.0 and 2.0, and the duration of the regime isn't one of them. So it lasts for the exact same amount of time. But you are right, Robin, in the sense that the legislature has stopped attracting people because, as I said, there was a housing issue and this was seen as putting pressure on the market. So the legislature came from simply attracting people, which was NHR 1.0, to attracting individuals who allegedly will actually add to the country. So and these are the high added value activities. So basically, the list of high added value activities was drafted based on the needs of the country. So it lists the professions in which we have more scarcity of people. And so the idea of NHR 2.0 is precisely to attract this kind of people and to occupy that kind of jobs, not just attract anyone.
Yeah, that makes a lot of sense, doesn't it? I mean, if you're running a business, you know, you're running a country, it's like running a business. You want people that are bringing revenue and, you know, perhaps not a burden on the state, for example. So yeah, get that. Yeah.
And it's good that you mentioned that, because the golden visa was also seen as an escape, was also used as an scapegoat for the housing issue. So these were actually the two big scapegoats, I would say, that the government has actually found to blame the housing issue. One of them was golden visas, saying that it was attracting people who were investing and simply speculating with the houses in the market, although actually the investment was even less than 1% of individuals buying houses. And the second one was the NHR, which was claimed to be a regime that was attracting people in general from all over the world who were not necessarily adding value to the country, and on the other hand, were not even paying taxes. I shall say, I ought to add to this that a few private studies were made, which actually show that the NHR actually brought more benefit, actually brought more revenue, indirect revenue, than it would have otherwise if those individuals were paying normal tax. So the result was actually quite good, but still they needed to blame something. So it was the NHR, both the NHR and the visa and the golden visa.
Yeah, I guess that's in terms of like indirect tax, isn't it? People are literally going to the country, they're spending,
Correct.
you know, there's the sales tax, they're buying a property, there's more tax.
VAT,
So yeah,
yes, transaction tax when buying the property, stamp duty. So yes, that's the kind of tax road tax if you have a vehicle. So those were the kind of taxes that these individuals were actually supporting. But of course, if they didn't have the NHR, they would not have chosen Portugal for their destination country. They would have chosen any other countries, which is actually happening, by the way, Robin, is we see and we are assisting loads of individuals who, at the end of the regime, simply choose to move to another country. And so it's a considerable number. So we would be talking about possibly even more than 50%.
wow.
So it's a sadness. It's actually, it has attracted individuals who would not otherwise come to Portugal, and that's the bottom line.
So then I guess people are looking around, kind of shopping around and going, okay, maybe I could come to Spain on the Beckham law, or maybe I could go to Dubai
Correct.
and not pay anything, and et cetera, et cetera. It's a bit of a competitive market with the countries when it comes to attracting talent and paying taxes, I guess.
Or Italy, by the way, now that you mentioned some countries, Italy is also in that role. Malta is also part of that. Cyprus is also part of that. So you are correct, Robin. There are a lot of countries who actually have these kinds of regimes to attract individuals or to attract wealth. And it's debatable if these regimes attract individuals wealth. Italy, interestingly, has two different regimes, one more beneficial than the other. They actually even have a flat, a 100,000 euros regime flat. So it's actually quite generous and obviously meant for very, very high net worth individuals. So, and that's correct. And it's even debatable if the countries should not compete between themselves in terms of revenue. You know, which country is more competitive will always win. And of course, as countries have autonomy and independence, there will always be tax competition. The OECD tried to tackle this, claiming it is harmful tax competition. But the fact is, if you're attracting wealth, then it is fair, and it is logical that the individuals will choose your country because you are offering them better conditions than other countries would.
Sure. Okay, so
I would just
sorry for interrupting. Over to you. I
please.
think you have a couple more slides. Yeah.
No, go for it, Robin. You were going to say something in regards to this.
Well, there's quite a few questions that when people are joining this webinar that they pre-registered.
Brilliant.
I think
Let's go
I think
through
you've
them.
covered most of them, but one of the questions was, what is a
Let me just go through the last slide then before
yeah,
we go through
okay,
the questions. Okay.
sure.
So I just want to say that some individuals, some clients actually have a misconception of what the NHR is, and I've had several clients asking me who had their NHR granted and saying, okay, can I now move to Portugal? So there is a misconception, and the NHR is not a type of visa. It's not a residence permit, it's not a travel document or a safe conduct. The NHR is only a set of tax benefits who are applicable to newcomers to Portugal. In a nutshell, this is what the NHR is. So Robin, to you with the questions.
Yeah, so a couple of, I mean, you've answered very kindly answered some of the questions already, but for example, um, there's a gentleman here in the US asking how his pensions, so I guess he's got a 401k or a Roth IRA, how they would be taxed in Portugal under the new regime. I'm guessing from what you've said, they would just be taxed as normal income.
100% right, Robin. That's it. They would be taxed as normal income. So
Yeah,
the only discount, going through that very quickly, the only discount pensions and employment get is 4,104. Anything above that is subject to tax, pensions
yeah.
included.
And for people like in the US where you've got federal taxes, I'm presuming the DTA between the two countries means that you're not going to be taxed twice, but you pay your federal taxes on that pension income and then you pay the balance in Portugal. Is that correct?
Correct. You actually pay. It depends if the pension is a public pension or a private pension. I didn't go into that, but if it's a
Yeah,
public pension, and when I say public pension, I don't mean paid by a public entity. I mean from a previous public employment. If it's a public pension from a previous public employment, then it is always taxable in the source country.
yeah,
If it's a pension from a private previous employment, then it is subject to tax in Portugal. Now, in regards
yeah,
to Portugal and the UK, you are correct in saying that the double taxation agreement stipulates uh, the possibility of paying less tax. Of course, if you've paid tax in the US, then that tax shall be credited in Portugal anyway. So you won't be paying tax in both
yeah.
countries.
I think it's quite a big misconception as well is about what we know as a government funded pension. So if you're in the
Correct.
military, generally the police force, some healthcare sectors, in the UK, for example, in the prison service or the civil service, that would be classed as a government funded pension. But
Correct.
your state pension in the UK is actually not, is it? Even though it's funded by the government. So it does get a
Correct.
bit confused for people. Yeah.
Yes, that's correct. There's a big misconception because of that, because they say they receive a public pension, but if it's from a previous private employment, then it is not classed as such, and so it will be only taxable in Portugal.
Yeah,
So,
exactly. Okay. A couple of other questions, if you don't mind.
by all means,
Um, there's a lady here from Helsinki, okay, who's asking, do I apply for NHR before or after I've arrived in the country?
well, that's not relevant. It's not relevant because you have until the end of the year of your arrival, or until the 31st of March of the year that follows your arrival, to apply for the NHR. So it is assumed that you will apply for the NHR only once you are in Portugal. But in practical terms, what is seen by the revenue as being in Portugal is if you're registered with a Portuguese revenue as a resident for tax purposes. So
Okay.
as long as you are registered for tax purposes, then you will be able to apply for the NHR. But it is a prerequisite to be registered as a resident for tax purposes.
Understood. Understood. And we keep calling it NHR, but it's not really. It's ITS, and it's we've
Yes.
we've we've called it NHR 2.0 to try, give some
Right.
comparison.
Actually, the government didn't give it any name. Conversely to what happened with NHR 1.0, that was called non-habitual resident, and although it wasn't a very nice name, but it was a sexy name at least. The new scheme does not have any sexy name, so it has become known as the ITS. So go on,
Yeah.
please, Robin.
Okay. Just another quick question. I'm conscious of time, as always with people. So we've got a question here that says, if I come to Portugal, let me just read this through. If I come to Portugal, okay. So this gentleman is moving to Portugal, and then he'll be selling his main residence in the UK. I know what the answer to this one is going to be. So he's going to sell his residence in the UK once he's settled in Portugal. Would he pay tax in Portugal?
Well, if he joins the NHR 2.0 ITS, then he will be exempt from paying any tax in Portugal. Or even if he joins the NHR 1.0, in this specific case, they're both the same. It's always exempt in Portugal.
Yeah, I would add to that in this case, from a UK perspective, he would then pay capital gains tax, because in the UK the main residence is exempt, and once he's moved to Portugal as a tax resident, that's no longer his main residence. So this is where
interesting. It's interesting that you said that, Rob. I think it's relevant to say Portugal, as you know, has a similar regime, but Portugal allows you to actually move countries. So if you move to a country and they're inside the European community that has an agreement of exchange of information with Portugal, then it is possible to sell your property in Portugal, reinvest everything you've made from the sale of that property in a property abroad, and still pay no capital gains, as if you were reinvesting in your main home.
Yeah, which is the same that where I am. I'm in southern Spain, so it's exactly the same. If I wanted to move to Portugal, I wouldn't pay capital gains tax on my main property, as long as I invested the full amount in another property as well. Okay, now that is really good. Thank you, André, for that. I'm really conscious of your time. I know you're a very busy man, and I do appreciate it. People can get in contact. Obviously, your contact details are on the screen there as well. They can call you direct. There's a UK phone number. There's a Portuguese phone number. There's your email ID. Obviously, the key to all this is pre-planning. I preach it a lot.
Correct.
If you visit my YouTube channel and everything else, you'll see lots of videos on this. But pre-planning and talking to experts is essential. So where we come in at Holborn Assets is that kind of cross-border planning and taxing, and we use people like André for his specific expertise in that area. So it's absolutely essential that you reach out to ourselves or André to kind of get you, in an English term, I'd say, get your ducks in a row and make sure that everything's going to plan. Okay. André, if there's anything else, but thank you very, very much for your time. I do appreciate it.
Thank you so much, Rob, for it.
It's a pleasure, and have a great day. Thanks a lot.
You too. Have a great day.
Bye-bye.